Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, over the last 24 hours, the market has noticed that the divergence has actually somewhat come into play. And also from a daily time frame as well as the weekly still suggests that we should see further weakness to the downside. Now the key level to trigger the move down is at 77.25. That was the low overnight, but it didn't quite get the bears enthusiastic to see the move lower down towards the 75 region from the measured move if we see a break of 77.25. However, the divergence is still in play and there is still risk of seeing that level being broken. And if so, that does give further weakness to the downside, as I mentioned, with the around 75 as a potential target. Into tonight, we do have the non-farm payrolls, and the market will be looking to see whether the US dollar, which measures the greenback strength against a basket of 6 major currencies, can rebound further from the 20-month low of around 89.20 being that. And therefore, currently trading around 89.80 is that we can see the euro has broken down, nearly posting a bearish outside range day, but not quite getting the confirmation due to the lack of a fresh high. Still, the break of the trend not fully broken, but a move through 122.25 would give further indication that we are seeing a slightly bearish pattern unfolding. And therefore, from the RSI break of the midway point and the MACD still remaining negative, could see a correction back towards the base around 120.5, which I am in favour. But I would like to see, first of all, the break of 122.25 to confirm the move down. There was a little bit of caution about dollar yen. First of all, there was bullish divergence, as you can see from the RSI low point to the price being low here. And then secondly, we can see that from the next low point, being a bullish outside range day, and also from the RSI, the bulls came back very, very aggressively and taking it back towards the 103 highs. Now we have a MACD to the bull case and also the RSI married up. I feel that we are looking towards this broad downtrend. If I just close it in a bit, you can see it's quite important because it does go back to as far as June last year. If we see a challenge there, then we might get another rejection like previously. So I'm not going to get too bullish at the top side of the range around 104.30.60. Nevertheless, there is still room to reach that target and reassess from there. Sterling, well, after about 4 attempts, you can see that 135.35 is still holding, but vulnerable. The reason why I say that is that we're broken through the midway point and also the MACD. And the close under 135.35 would initiate a down move and therefore could see the drop towards 133.5. With some of the fundamental factors in, is that the lockdown in the UK, as well as the fact that the market is still playing a little bit now to 2 bearish outside range days that could see the break of 135.35 and initiate the move down to, as I mentioned, at 133.5. Sterling yen finding a little bit of recovery due to the fact that the weakness of the yen as the pound consolidates above that 135.35 level. If the view comes through that the pound does take out that level of 135.35, and as you can see, it's only about 30 points away, would see a reversal from the top side of the range around 140.130. As you can see, a very strong outside range day from that challenge, and look back towards the downside of 139.40, which I'm in favour of. Since the $60 fall in gold, we've seen that is a bearish outside range day and still holding. Now a break underneath the level around 1,890. It's a little bit lower than where we are, but I'm being a little bit cautious to the fact that I would like to see the MACD breaking further to the downside, although the RSI has, is that we could see a drop back towards the level of 1,850 as a potential target. But let's see if we can break this trend line to confirm. Wrapping up with oil is that the market's still holding above that $50 break. As long as we don't break beneath this level here, which is around 49.45, I believe, to around 55, then we could still see a rise up to $54 a barrel. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the rest of the day and the great start to the new weekend.